Right then, folks. Good morning. Thank you, as always, to Hex Street for hosting this session for me. Something slightly different this week. Something slightly different. Some things the same, something slightly different. Essentially, what we're going to look at is no surprises here, because this really is the core of everything I do. We're going to re-evaluate the price action sequence. Again, it does no harm. You can't drill this price action sequence that I use enough. And then what we're going to look at, again, take it off in a slightly different direction. We're going to see how price action interacts with indicators. Now, I'm not a big fan of indicators, as most of you know. But if you were to use price action interwoven with indicators, it can ultimately provide a nice combination. It may even provide a nice complement to what you're already doing. It may be that whatever indicator you're using, and we'll look at several, but whatever indicator you're using, it might ultimately be a superb complement. It might just be that missing piece of the puzzle that you're ultimately looking for to make those indicators work. I know personally from my own experiences from using indicators in the past, is I just couldn't quite get them to work for me. And the missing elements was when I started thinking about, well, what's price action doing? If price action is based on, indicators are based on price action, surely the first port of call will be to think about what price action is doing, and then think about what price is doing in relation to the indicators, whether it be with move on average, stochastics, RSI, MACD, all those are based on price action. So if we can assess price action before we look at the indicator and use both the price action and the indicators to support each other, then it should make a nice, powerful complement and a nice combination of events. So first thing we need to do is, first of all, address price action. This is the core and the basis of everything I do. The basic premise of price action is when price is making higher swing highs, higher swing lows, it's going up. When price is making lower swing highs, lower swing lows, it's going down. When price is making neither new highs or new lows, it's going sideways. Nice and simple, nice and sensible. But those statements are made in many textbooks. But what the textbooks and what a lot of people don't tell you is what basically dictates price making higher highs, higher lows. When people say that, it's usually taken for granted that you know what that is. But what if you don't know when price is making higher swing highs, higher swing lows, low swing highs, low swing lows, or neither? Or more importantly, and one of the key elements of this is, when does it change from making higher highs, higher lows to lower highs, lower lows? When does it go from being biased the long side to biased the short side, or even to being range bound? When does that happen? It's easy to say after the fact, but let's address that and look at it in real time. So when price is making higher highs, higher lows, it's going up. When it's making lower highs, lower lows, it's going down. What does that mean? Let's put some rules and some definitions onto this. First of all, I want to know what a higher high is. Let's call it a higher swing high. So I'm looking for a higher swing high and higher swing lows, or lower swing highs, lower swing lows. Let's start off on the left-hand side of the chart. A swing high is, for me, a bar preceded and succeeded by lower bar highs. It's a 3-bar combination. You can ultimately, just a little sidebar, you can use more. You can use a 5-bar combination with 2 bars prior and 2 bars after, if you so wish. I personally use 3. So I'm looking for a 3-bar combination. Basically, I'm looking for a bar preceded and succeeded by lower bar highs. And a swing low is just the opposite, a bar preceded and succeeded by higher bar lows. So again, a 3-bar combination. So with that knowledge, it still doesn't mean anything. Swing highs, I know what a swing high is, I know what a swing low is. So it's only when you start counting the sequence of events that it starts to take on some framework. So I'm just going to mark off very quickly last couple of swing highs and swing lows just to get us to this point. So what can we see? Now let's start naming them. Swing high, swing low. Now I've got higher swing high, higher swing low. Lower swing high, higher swing low. So I've now got a lower high and a higher low within the previous swing high and the previous swing low. So at this point of the chart now, price is effectively range bound. Until price moves beyond support lows or resistance highs, price is going to be range bound. So in this portion of the chart here, price is range bound. So previously, we don't know what previously, I'm not going to scroll back, but we've got high, higher low, higher high, another higher low, lower high and higher swing low within the previous swing high and the previous swing low. So at this portion of the chart, price price is range bound. That's price is range bound. So then we have price breaking out, breakout, pull back, swing low, or lower swing low. So lower swing low, lower swing high. So I've now got price making a lower low, lower high. So at this point of the chart, price is in a downtrend. It's pointing down. It is making lower swing highs, lower swing lows. So it's gone from being up to range bound to down again. You can put a label on this range if you want. You can call it an asymmetrical triangle or a descending triangle. I don't really care what you call it personally. It makes no difference to how I trade it. What I'm looking for is the extreme boundaries, support and resistance. And again, for trading purposes, you can drop down to the lower time frames to identify a lower time frame breakout. So breakout, pullback, price making lower low, lower high, still making lower lows, lower highs. Let's just quickly, this will become evidence. I'm going to do the whole chart that we can see at the moment, and it will become evidence when we look at the indicators later on why I'm doing this. So we've got lower low, lower highs. Again, price still making lower low. Let's just take these lines off at the moment just for clarity. So lower low, lower high. I've got a higher swing high. So this is an alternative bias range. So say what we see in the chart. Lower low, lower high. I've got a slightly lower low here and a higher high movement. So if price goes above that last higher high, higher swing high, then price will be in an uptrend. Now it doesn't do that, and price continues its downward trend and makes lower lows. So again, lower low, lower swing high, higher swing low, higher swing high. So if price goes above that higher swing high, I'll be in an uptrend. That is the first point in time that price is making higher highs, higher lows. And to confirm that upward trend from that breach of the swing high, price will be in an uptrend until it's range bound or it starts making lower highs, lower lows. So is everyone with this so far? Does everyone understand the concept of higher highs, higher lows? And any questions so far? I'm just going to quickly update the next portion of the chart. Again, it will become obvious later when we're looking at the indicators. So we again, just updates. We had high, high, low, lower, high, lower, low. I had to go above the higher high, higher swing high. We did have a potential return to the downtrend, and that didn't trigger either for the short trend, and the uptrend eventually triggered. So again, analysing the chart. So what we see in the chart, we've got higher swing high, inside bar, and another higher swing high there. Price is making higher lows, higher highs. Again, let's just skip a few over. Okay, so some attempted buy change, high, high, low, lower swing low. Doesn't go below the lower swing lows. So the uptrend stays in force. So we've got the high, again, higher low. Another lower high and another lower low sequence. So again, price doesn't go below the lower swing low. So the uptrend stays in force until price is making lower highs, lower lows. Now, price needs to go below. Again, the key is price needs to be making lower highs, lower lows, and price then needs to make a movement through that lower swing low for a short direction bias. Now, as we can see, the lower swing lows aren't being breached, so the uptrend, the previous direction, will stay in force. So price continues to make higher highs, higher lows, until we get all the way up to the top of the chart. So price is essentially in an uptrend from all the way, let's just put a vertical line on this, from all the way down there. So price is in an uptrend from there. So what's price doing now? High, higher low, lower high, lower low movements. we've got high, high, low, lower, low. Price goes below the lower swing low. I'll be in a newly established downtrend. So it does make a slight higher high there. It doesn't void the bias change. If price goes above the last highest high, that will ultimately void the direction bias. And again, price is continuing to make lower highs, lower lows. So price is in a downtrend from that vertical line there. So we've got high, high, low, lower, low. Price is in a downtrend from that vertical line. And we've got price making still lower highs, lower lows. We do have a higher high, lower high. So price is making higher lows and lower highs within the previous swing high and the previous swing low. So briefly, price is consolidating between the two extremes of movements. At that point there. So we've got the high, higher low, lower high. I've got a lower low, lower high, and again, price eventually starts to roll over back to the downside. So at the moment, price is ultimately in a downtrend. So let's think about what's going on most recently with the live part of the charts. Lower high, lower low. Sorry, lower low, lower high even. I've got a lower swing low. And potentially, later on today maybe, we could potentially, you can just think about the future possibilities of what could ultimately happen. It could well be that we get at some point a lower swing high. Now for that to happen, I need a bar preceded and succeeded by a lower bar high. So if this live bar, this current live bar, if that's going to be the highest point of this upward movement on euro dollar, I need the bar after to have a lower individual bar high. Now if that happens, I'll have a lower high, a higher low and a lower high still developing, but later in the day that could confirm. And I'll have a lower high and a higher low within the previous swing high and the previous swing low that we've identified. So potentially we could be looking at a consolidation in development. John, this is something we're going to come on to later. I mean, what we're doing at the moment is just identifying direction. So, for example, think about entry opportunities. If you're looking to bias yourself to the downside, so at the moment, until that consolidation is confirmed, I'm looking to sell the rally in a downtrend. Let's just take a look at euro as a quick example of how you can participate in price action. So we know that this is my usual trading screen. So we know that price action is in a downtrend, and potentially, only potentially, we could be looking at a consolidation that's only partly developed at the moment. I need a lower swing high to confirm that. Until that happens, I'm biased to the downside. So if I'm looking to sell the rallies in a downtrend, one of the things that I can do is just looking at the 15-minute chart for a moment. I can look to sell the rallies in a downtrend. Now, the way that I use fibs, again, please see the fib tutorial video. There is a separate video in the transcript section for this. I'm not going to cover the full outline for the fib strategy. But essentially, I've got fibs from the high down to the low of the day, and price is retraced once, twice up to the 50% retracement. A potential shorting opportunity there for a fib retracement setup. Potential shorting opportunity there. And again, the same thing. So I move up to the 50% retracement. And again, a 15-minute entry will be a close past the 38. Move up to the higher value fib, close past the lower value fib. An entry below the bar that closed past the 38% fib or the lower value fib. Or I can use the same bias change sequence to identify short trading opportunity. And this is one that I've taken on earlier in my own live trading room. So we've got the high, higher low, lower high, lower low movements. Entry below the lower swing low. So the same pattern can be used, and I've identified a location based on fibs to identify that trade opportunity. Now this one obviously got stopped out, didn't hit my scale out for trade management, but price is up at the 61% retracement now, so I can start that process off all over again. And in real time, just so you can get the feel of this, what I'm doing is I'm marking off the last two swing highs, two swing lows, the last two swing highs, two swing lows for trade management, to identify trade opportunity. So what I can see is by marking off the last two swing highs, two swing lows, I can see that on this upward movement, price was making higher highs, higher lows. We've got high, higher low, high swing high, another higher swing low, and just about to develop on the lower time frame is a lower high. So we've got high, higher low, lower swing high, I've got a lower low movement. So what I'm looking for an entry for a fib setup would be a lower swing low. Entry below the lower swing low, that's still developing, and a stop loss above the pattern, which is the bias change. So from an entry perspective, I can use exactly the same pattern. Now what we're focusing on with this larger time frame is direction, but exactly the same concepts can be used to identify trading opportunities on lower time frames, whatever your preference is. For me, I like to use a 240, 60, 15, and an 89 tick chart combination to identify trading opportunities. If you don't have an 89 tick chart, a 2 or 3 minute chart will give you a similar effect. So hopefully, John, that should answer your question. So just back to the direction side of things for a moment. We've worked out the direction biases. Let me just put on the short one that we worked out there. So price is short from there. So we've worked out 3 phases of the markets. Range bound, downtrend, uptrend, another downtrend, and potentially another range is potentially developing. I'll just remove these lines for the moment for clarity. It's not important at the moment. It's not confirmed. But the potential later in the day on Euro is that if I do see a lower swing high, I will have a higher swing low and a lower swing high. It's not making a higher high. It's not making a lower low. So if it's not making higher highs, it's not making lower lows, it's range bound. And most likely, later on in the day, we'll have that asymmetrical triangle, if you want to put the label on it, confirmed, as price will make a higher swing low and a lower swing high within the previous swing high and the previous swing low. So price is range bound. So that is the price action sequence. When price is making higher swing highs, higher swing lows, it's going up. When price is making lower swing lows, lower swing highs, it's going down. The transition from one to the other, let's just see if we can catch this in real time. The transition from one to the other, just going back to the my main screen for the moment. See if we can catch the transition in real time. Let's just zoom in a little bit. So we've got the higher swing high, higher swing low, lower swing high, and what I'd be looking for from a trade point of view, and even just for the direction to shift at resistance for me, would be a lower swing low. So that's still developing. I need a bar preceded, which I've got, but also succeeded, bar after, this current live bar, to have a higher bar low. So potentially, I could be looking at a higher swing low here. So if that's the case, I'll have high, higher low, lower high, lower low sequence at a level I'm prepared to think about selling from a trade point of view. So thinking about this in real time, that's what I'd be looking for to enter a trade. So we've thought about the price action sequence. High highs, high lows go up, lower highs, lower lows going down. When it's making neither new highs or new lows, it's range bound. Is everyone happy with the concept? And the important part is the transition from long to short or short to long. This is what we're looking at, just focusing on this in real time. Let me just put the candlesticks on. It might be a little bit clearer on the projection. So we'd have the high, high, low, lower high, and just waiting for that lower swing low to develop. Dorex, from a trade point of view, I'm looking for from the fib strategy, I'm looking for a move up to the higher value fib and a close past the lower value fib. So I move up to the 61, a close past 61, so I can have a 15-minute entry there as well. So it's either the 15-minute entry or the bias change entry. I generally refer to this bias change sequence as a bias change entry. So it's either a 15-minute entry or a bias change entry, whichever develops first. Now, if I get stopped out on a lower time frame, I can look for a higher time frame entry. So, for example, if I had a breakout setup on the lower time frame to stop me out, I'd look to reposition myself perhaps on the 15-minute chart with the same breakout pullback setup. So I can look for the same patterns on the time frames. Rob, this is what I'm trying to explain. The entry, it's still yet to be defined from a bias change point of view. I've got the high, higher low, lower high, and I'm waiting, just by chance we've got a real-time example, I'm waiting for the lower swing low to develop. I need this current live bar to complete to have a higher low, a bar preceded and succeeded by higher low. So this current bar here with the last blue arrow on has got a bar before with a higher individual bar low. And so far, it's looking like this current live bar is also going to have a bar with a higher individual bar low. So this would be the swing low. So that would create the entry on the completion of this bar for a bias change entry. Any questions so far on price action? We'll get these out of the way and then we'll move on to integrating this with indicators. To be fair, I'm not going to go through the strategy at this point, Python and Rob. The fib strategy is determined. It's been recorded on a separate recording, as has the breakout strategy, which uses similar price action philosophy, and targets are determined based on an average day's move. That's explained on the breakout video. It's also on the very, very first blog entry outlining the full strategy in the text article. And if you want to, let me just get a link for you. So I'm not going to cover that now because it's beyond the scope of what I'd like to cover today, but it has been covered on past webinars that have been recorded. From intraday trade point of view, just to give you a quick overview, from an intraday trade point of view, the targets are based on an average day's move. And ultimately, for large time frames, you can use fib extensions. So any other questions so far? So we've had that, just when I've got one in real time, we've got the high. So when is the transition from, in this case, long to short? When is price going from up to pointing down? Well, price on the retracement move was making higher highs, high lows on this lower time frame. And the transition in real time is high, higher low, lower high, lower low. So from a trade point of view, I've got a location that I'm interested in, but the transition is what I'm trying to highlight. So if price goes below this lower swing low, then the direction will be down on this time frame until price makes a new high on the move or gives a new direction bias up. How much will on a 60-minute chart you have? How much do you think price will climb? To be fair, FX Visions, if I knew that, I wouldn't. I would have retired a long time ago. No one knows that. Price can infinitely go up to be fair, price could go up to 150, 160, 170 on euro. If anyone can answer that question, if anyone can consistently answer that question, you'll be millionaires by the end of the year. We don't know what price is going to do until it does it. No one knows that. If anyone tries to tell you any difference, they're lying. What we do know is that, well, resistance. So let's deal with facts rather than guesswork. Where do I think it could go? There's no reason why this couldn't get up to the high of the day. There's nothing in its way. There's no resistance in its way. Looking at the 15-minute chart, there's no resistance in its way up to the high of the day. There's no reason why it couldn't get there. Okay, so if that's all the price action questions dealt with, the price action sequence, let's think about integrating price. This is really what I want to move on to next. Is typically I deal with price action on its own. I've got no problem with that whatsoever. But I've had a lot of questions recently about integrating price action with indicators. So we're going to look at several indicators to see how we can integrate price action with, and I usually just touch on this very briefly. I want to spend a little bit more time on this week. So let's take a look at MACD first of all. MACD, moving average, convergent, divergence. It's just for illustration. I don't personally use indicators. Again, tend to focus more on price action. So why would I be showing you this? Well, again, a lot of people like using indicators. I personally don't. So how could you, or how can you use indicators as a part of your trading routine and integrate this with price action? So let's just look at some basic setups with MACD. MACD, when the fast line crosses over the slow line, you can have a moving average, effectively a moving average crossover, indicating either a long or a short signal. There's also a few other indications that we can use on MACD. We can look at divergence, we can look at zero line retests, but just for the purpose of illustration, let's just deal with one or two. Let's just look at the moving average crossovers. So over here, we've got a moving average crossover on the MACD. Now, typically that would indicate a short direction. Now, we've already worked out the price action sequence, so we don't need to go through that again. So this vertical line here, let's just change this color so it stands out. Let's make this purple. So this is the MACD crossover here. So from the MACD perspective, you should be thinking about a short, but hold on, we've already worked out that price is making higher highs, higher lows. And again, in real time, let's just give you a real time, give you the real time look. So in real time, that's what you'd be looking at. MACD crosses over. Lots of people are wanting to sell or be thinking about selling euro dollar 240-minute charts. Most people who don't know the difference between a trend. Now we know the difference now. When price is making higher highs, higher lows, it's going up. So we've got a contradiction in indicator to price. So price is still making higher highs, higher lows. So you can pretty much filter out that short signal on euro dollar 240-minute chart. So it's still a wait situation. Now we know that price starts making higher lows and lower highs within the previous swing high and the previous swing low. We've already worked that out. Let's go back to the full chart. So we've already worked that out. Price is making higher lows and lower highs within the previous swing high and the previous swing low. So in that blue box that we've highlighted, price is range bound. Price is range bound. So when price is range bound, we can pretty much drop the MACD, moving average, clues in the name, convergence, divergence. The moving average is a trending tool. We know now that where this vertical line is here, from that point there, that price is consolidating and will continue to consolidate until price goes above or below the support and resistance lines where price is contained. That's already been worked out. So, but MACD, it crosses down, it crosses up, it crosses down. And to be fair, you've avoided at this point of the chart potentially several whippy trading opportunities. You're basically going long, short, long, and then probably think, hold on, I'm going to wait. Now you've already identified to wait. Price was in an uptrend, then it confirmed consolidating. MACD's crossed down, so you've now got that filter based on price action to filter out the weeds, if you like, the less quality signals or the false indications on MACD. MACD crossed down, price action was still up. MACD crossed up and confirmed price range bound. So price is saying price is range bound and for you to wait and wait for a movement past support or resistance to continue or resume using the MACD. Price breaks out, so this point of the chart, this point of the chart here is where we really should be thinking about taking a trade opportunity on board based on price action and the MACD. MACD is already pointing down. We know price is range bound. Price breaks out, breakout pullback, and price is now trending. So that's the time to start thinking about a short trading opportunity. Now, once again, price, let's just mark off, I'll just go through two more. Price crosses up. What was price doing? Lower high, lower low, higher high. So MACD crossed up. So price would need to go above that higher swing high that we identified for a long trigger. It didn't do that. So you've managed to filter out the long signal because you're waiting for price to make higher highs, higher lows. So another avoided potential wrong direction by using price action and the MACD to confirm the direction. So it's only, where do we have? We had lower lows. The next, so price we know, so price making low, lower high, higher low, higher high. So price action was going long above that level there. Now we know that price went short, long again, and then price action said that if price goes above higher high, then I'll be looking for long. It went short, long, long again before it hit the long trigger. So again, you've managed to avoid 1, 2, 3, 4, 5 whippy signals. Is this making sense how to integrate price action with an indicator? And again, we're only just looking at MACD for the moment. We're going to look at a few others as well, just to give you a rounded view on several indicators. again, everyone understand the concept of what we're talking about. Price action, combining price action with the MACD signals. Again, we're just looking very simply at the crossover aspect of MACD. You could easily use this with divergence. Let's just see, do we have divergence? No, nothing jumping off the charts. So again, crossover, MACD crossover. So you're going to be long. Price is making higher highs, higher lows, all the way up. So we know, so this vertical line here, where price was going short. So again, price making high swing highs, high swing lows on euro dollar, but the MACD is going long, short, long, short, long, short, long, short, short, long, and finally short over here. So you've managed to filter out, again, a lot of signals by integrating price action with indicator. So MACD crosses down. Finally, we know that price making high, high, low, lower swing low. It crossed down. Price action confirmed. So when price action was going to go below that lower swing low, that was the indication to think about shorts. So everyone happy with the concept with MACD? Everyone happy with that concept? I think everyone gets the idea with this. Let's take a look at something else. So that's MACD. That's MACD and price action. Let's take a look at DMI. I've had a couple of questions about DMI. Directional Movement Index. This is a mathematical indicator to highlight trending price action. To cut a long story short, again, if you want to read up on the DMI indicator, but to cut a long story short, when the red line is above the blue line, it's trending down. When the blue line is above the red line, it's trending up. And when the yellow line is above 25, we've got our 2025 price is trending. That really is as simple as I'm going to make it. Again, I'm not here to explain the indicator to you. I'm going to mark off the 20 level. So price, a little bit messy. Red line above the blue line. Red line above the blue line. We know already that price was range bound and trending down. So price is confirming price is trending down, and the indicator is confirming at about the same time as well. So we've got the red line where the cursor is above the blue line, and again, very, very basically, price is trending down. So again, price trending up here. So the DMI blue line very briefly goes above the red line. So from this point of the chart here, you could possibly be thinking that price would be trending up. And it's not, because price action is still making lower highs, lower lows. So if the blue line's above the red line from the DMI and the ADX, this is a combination indicator, by the way. So the DMI, the blue DMI line, is above the blue line's above the red line. So basically, price is trending up. But we know that price action is still making lower highs, lower lows. So again, we can filter out the false indications from the indicator and use the indicator as a confirmation of what price is doing. Now, sometimes you will get the indicator giving you a potential indication before price action, but if we're falling back on price action, ultimately price is making, again, we know this portion of the chart here, where the cursor is dragging back across the chart. We know that price is making higher highs, higher lows in this part, and is continuing to make higher highs, higher lows. But look what the indicator was doing. It was basically flipping above the 20 line, which is basically saying strong trend, weak trend. That's usually the threshold for it. And it's basically going from long to short, strong trend, weak trend, long to short, strong trend, weak trend, strong trend, weak trend, long to short. But we know what price is doing. So again, we can filter out 1, 2, 3, 4, 5 different direction shifts from the indicator, because price isn't indicating the same thing. Price isn't telling me that it's making lower swing highs, lower swing lows. There were a few attempts at lower swing highs, lower lows, but they didn't confirm. So again, price action combines with the directional movement indicator as confirmation. Everyone happy with that? Again, a few people use this. So again, tying price action in with indicator. Any questions on DMI and the ADX? So basically, the DMI and the ADX, again, can use that to indicate price action. So we can use them as a confirmation tool of price movements based on price action. Let's take a look at RSI, another common indicator. take a look at RSI. RSI is one of those tools that you can do. You can basically use technical analysis on the indicator as well. You can put trend lines and look for patterns. It's quite a nice little tool actually. Just stick with some basic stuff, trend lines. So direction is down, and again you've got a trend line. Again, trend line break here. So you've got a nice little downward trend line here. Trend line break. Typically RSI has got a trend line break here. Price is making low, lower high, higher low, higher high. Let's do the same thing on RSI. Swing low, swing high, confirming price action, swing low and swing high. Higher swing low, confirmed by price action, higher swing high. If price goes above higher swing high on both price and RSI, guess what? We're in an uptrend. Again, confirmed already. Price remains, to be fair, RSI remains sideways. Price making higher swing highs, higher swing lows. We get trend line break again. High, high, low, lower, high, lower, low. So we can use the same sequence on RSI. We've got swing high, a little bit vague, but you can ultimately see it. Higher low, lower high, lower low on RSI with a trend line break, which is there. And with that trend line break, that's when price confirms the direction bias. We've got RSI showing the same thing. RSI making lower swing highs, lower swing lows. Nice little trend line. Again, everyone understand the concept. RSI is one of those nice little tools that we can do technical. Let me just expand this. RSI is one of those nice little tools that you can do technical analysis on as well. So it's overbought. High, higher, low, lower, high, lower, low. Price, guess what price doing? High, higher, low, lower, high, lower, low. Price goes below the lower swing low. Downward trend. It went below the lower swing low on RSI, confirming the downward trend. No, it's not closed below. Price moved below. So the question from the room is, still not quite clear with this. Is a downtrend established as soon as price is closed below the low of a high, low, lower high? Or has price has to close below? No, there's no close involved. It is what price is doing. Lower swing high, lower swing low. Let's just go back to the, let's see if we can find a better example. So price just needs to, it's just a standard setting on this, Linda. Price just needs to make, let's go through, high, high, low, lower, high, lower, low. It's just a movement. I'm not looking for a close past a particular level, point on. I'm just looking for the sequence of events. It doesn't matter for me, it doesn't matter whether price closes below the lower swing low or moves 1 point below it. That is the trigger for a direction change. So if price goes below, let's just look at the most recent. Let me just zoom in so we can see this. If price goes below that lower swing low. So what we've got here on price, we've got the higher swing high, higher swing low, lower swing high, lower swing low. Price moves, doesn't have to close. Price moves below the lower swing low. We're in a downtrend. End of story. That is a fact. These are market facts. You can't deny this. You can't fudge the numbers. Price is what it is. What is price doing at that vertical line, at that moment in time? What is price doing? It is making lower swing highs, lower swing lows. That is a fact. You can't deny that. Forget what we know. We're looking at that with hindsight, if you appreciate that. Let me just squish that down. We know what happened with hindsight. In real time, what is price doing? High, high, low, lower high, lower low. Price goes below the lower swing low. We're in a downtrend. The lower high in real time will be developing, and price triggers that lower swing low. So from that point onwards, until price makes higher swing highs, higher swing lows, we are in a downtrend. That is a fact that can't be undisputed. You can't make it up. That is what is happening on the chart. I'm not looking for a close, a certain percentage movement, a certain pip movement past a particular level. This is simply a fact. It can't be denied. Okay, so I think, okay, we've done DMI, we've done MACD, we've done RSI. Yeah, that's correct, point on. If you want to watch it, if you want to get the price action in more detail, again, I've got several videos on the site. You can watch them at your own leisure. And if you want to get me on that. Right, okay, so we've got RSI down. Again, we can do more classical technical analysis with trend lines and again the swing highs and swing lows. Again, it's a nice confirmation tool as well. And to be fair, with RSI, with the swing highs and swing lows, price is most likely going to confirm what's already going on. We can do trend line breaks, etc. on there as well. But we've got a nice little trend line break with the trigger of price action. So again, we can use price action to confirm. We can use the indicator to confirm what's already going on with price action. Lastly, I want to look at moving averages. Again, a lot of people look at moving averages. Again, I'm not too concerned with them. Moving averages. Again, these are just two fast ones. Again, I just picked them up randomly. Don't worry about it. Whatever your personal preferences for moving averages, you can use lots of different ones, different combinations. Essentially, it's no different to, for example, MACD, but essentially what we're looking for is a moving average crossover. The fast moving average moves over the slow moving average. You're looking for a long, and vice versa for a short. Again, these are just two random moving averages. To be fair, I don't even know what setting they are. I just literally picked them at random as a default with the charting software that I'm using. I don't use them. I'm not really interested in them personally. But what is and how can we filter out the signals with price action? Again, we've got MACD crossed up. Price action was making high swing highs, high swing lows. MACD crossed down, but we know that price was range bound, so we know that we can't rely on the moving averages because price is range bound. Again, it's a trending tool, and we've established in this blue box that price is range bound. So price making lower highs, lower lows. We've got the breakout move. We can start using the moving averages again on the movements below support lows. Price is trending once again. We get the crossover here, down here. Get the crossover down here. Crossover down here. Price isn't yet making high swing highs, high swing lows until price gets up to above this level. So we have the MACD crossover in this case in advance of price action confirming. So price action confirms. Now, yet in this example, we're getting in later than perhaps what you might like to, but we don't know what the rest of the chart looks like with hindsight. It could be that MACD, the moving averages crosses over and then sells off again. Price needs to confirm price making high swing highs, high swing lows. So let's put a couple of these on these. Let's put RSI on here. And let's also take a look at MACD. Again, this is actually no, I can't do that. Take a look at RSI. Oh, why is that doing it? I was going to look at a combination of indicators. So we've got MACD, RSI. And again, for some reason, my charting platform's not allowing me to do it. Okay, I'll put the moving averages on in the absence of MACD, and we'll look at. There we go. Okay, I'll just leave the moving averages on with RSI, and this one's been able to get MACD on there as well. So what we can look at is then start building. So what you have now is a combination of. You start looking for, again, if you're building an indicator strategy, what we can look at is a combination or a sequence of events which leads up to an indication to go long. So we know that, again, let's use moving averages, let's use RSI and price action. So we know that price is in a downward trend on RSI, price was range bound. So until price breaks out of the consolidation, we can't rely on the moving averages. So until price breaks out of the range, we can't rely on the moving averages. When price does, we can start looking at the moving averages again. RSI is making lower highs, lower lows. It's swinging down, going to the oversold levels and trending down. Price action is also making lower swing highs, lower swing lows. It's going down. So ideally, you're looking for shorts. And again, the same philosophy. Let's just look at the most. Let's look at the most recent price action. So let's think about using this for an entry for the moment. So literally, we just cobbled together a few indicators. Indicators are Let's just look at the most recent price activity. So we know that price action is in a downtrend most recently. Let's take a look at some live charts now. So moving average is down, crossed over. Price is still trending for the moment. RSI is in a downtrend and just banging up against resistance for the moment from the RSI indication. So from this point of view, looking for a short trading opportunity. Let's just drop down to the 15-minute chart. Again, we've just literally cobbled together a few indicators. So when price starts to point down in the opposite direction, we can start thinking about, or we're looking for shorts. So we can start thinking about, again, perhaps the price action sequence. What's price doing? They've got the high, high, low, lower high, lower low movement over here. So yesterday you could have been thinking about a short trading opportunity on the euro with a bias change sequence. We've got lower low movements there. So let's just mark this off. So we've got the high, higher low, high low, higher high, lower low. So you get the lower low first before the lower high in this case. It's an alternative bias change. So you've got the lower swing low. Moving average is crossed over. Let's see if RSI is confirming similar. So you've got a high there, higher low, lower high there. And again, we can put some more classic technical analysis on here. So you've got the trend line break, price making high, higher low, lower low movement. So if price gives you the lower low movement, you have price action making lower highs, lower lows, and RSI making a trend line break and lower lows. So now what you've got together now with a combination of price action and variety of indicators, you can start thinking about strategies with indicators and price action. The only thing that's absent from this point as we've run out of time is thinking about money management. So again, that's also something else to consider. So price action, we've looked at a variety of indicators, the price action sequence, and very briefly, just at the end there, we just cobbled together a couple of moving averages, RSI, and already you can see that with just a few key elements, with the basis on the foundation stone of price action, you can start to develop a strategy. Hopefully that's clear. Again, I run out a little bit of time, but again, start thinking about money management and money management to surround the trades and trading opportunities. So again, bias to the short side. Again, thinking about moving average crossover there. What's price doing? Higher low, higher high, lower low movements. Again, appreciate this is overnight, so realistically, probably not going to trade that. So moving average, retest and crossover. So again, price is crossing over downside. So thinking about moving average crossover, moving average crossover to the downside, looking to trade pullbacks into the moving averages, and the direction on RSI is still pointing down, suggesting downward movements. Trendline retest on RSI, so we've got a trendline break on RSI, moving averages are crossed up for the moment, and the 240 minutes is down. So 240 minutes is down, we've already established that. 15 minutes is up based on this literally haphazard strategy that we've just cobbled together. So you're looking for moving averages to cross over, a trend line break perhaps, or lower highs, lower lows on RSI. So let's just tidy this chart up a little bit. So you've got trend line. So thinking about a new trading opportunity based on this, literally a strategy we cobbled together based on price action and a couple of indicators. You're waiting for the moving averages to cross down and trend line break or price to make high, high, low, lower high, lower low sequence on RSI for confirmation of what price is doing. That's it, folks. Price action with indicators, and very quickly at the end we just cobble together what could be the foundation stone of a strategy that somebody might like to use. If you want it, there it is. The only thing that's missing as an element is an exit strategy and money management. Any questions, folks? Any questions? Dorex, yeah, I use horizontal support and resistance, and I use fib retracement levels as well. Typically I use age and session range high and low, previous days highs and lows are my interesting levels. Okay folks, that's me done. Again, if there's any questions, please feel free to drop me an email. It gets me via the site. But apart from that, I will bid you adieu. Just something different for a change this week, just something different. Again, I don't often talk about the indicators, I don't like them. But again, price action sequence built into and surrounding the use of a variety of different indicators and how you can cobble all those together to start the foundation stone for a new strategy with indicators. Thank you very much for your time, folks. Again, something slightly different just for a change. Hope you've enjoyed it. And if you've got any questions on what we've discussed, please feel free to contact me.